Hello traders, how's everybody doing this weekend? A little late getting my video out, my weekend charts to ponder, but we'll get them out here. Hey, this is Rick with Hit and Run Candlesticks, and I want to thank you so much for watching this video. Today's date is February 21, 2021. It is Sunday, and I've got some charts here that we're going to be updating our watch list for next week and the following week and the following week. As we look at these charts and all of our charts on the watch list, what we'll do is, we take the charts we like, we take the charts that looks like they're set up, and then we wait for our alert system to alert us when they're in the pocket area where we think is a good buy, and then we'll look at buying those. All right, before we get started here, a couple things I want to remind everybody of. And let's see, that is the first one is, again, welcome everybody. If I didn't say that already, I do want to remind everybody, check the chat links below. Click on that little show me text, and when that opens up, there's links down there for different things, such as the 30-day trial. We still have a 30-day trial available here at Hit and Run Candlesticks. And if you have not subscribed to our YouTube channel, please just reach over there and click on that subscribe button if you'd like. We'd sure appreciate that. Leave us comments, thumbs up if you like it, and comments on things you might want to hear about, things you might want me to talk about and share, different things, and I will certainly do that. Also, I want to remind everyone that this coming Tuesday night, let's see, what is that? The 23rd, so February 23rd, 2021, I'll be presenting a webinar to the public, and the topic is the blue ice failure, so it'll be a refresher on the blue ice failure short setup. I hope everybody can be there for that. I appreciate it if you are. Also, a little later in the video here, I'm going to talk about this a little bit more. But I want to remind everybody, just kind of I just want to toss it out there to stay tuned. We'll be updating you more on our Falcon trading computer giveaway. We're still compiling the details. We're still putting it together. Few little cross the T's, dot the I kind of a thing. But we'll be updating you more on that. And a little later in the video, I'll be talking a little bit more about the Falcon computer, just a tad more about that, okay? All right, let's get started here. So let's talk about the road to the wealth account. This past week probably was not my best week for the road to wealth account. We ended up actually overall in a week losing a little bit of money. Not a great deal, but we certainly didn't make any. And I'm sharing this with you for complete transparency. Man, I want everybody to know that, as a trader, no, I don't make money every single day, and sometimes not every single week in the market. And I just think it's important for people to understand that when you're trading. I know you hear so many things about these people that make, millions, and, it's like they're gods when it comes to trading, and they never lose money, and that's just not true. And I just want to get out there and tell you that this past week for me was, just not so good. So very choppy this week. Here, I've got the SPY up. This has been a very choppy week, this whole week, and I'm not ashamed of it. I'll admit it. Choppiness is my kryptonite. I do not like choppiness. When I'm looking at a market, I'm the happiest when the market is just flat going down or the market is flat going up. But when the market is doing this choppy back and forth, gap up, gap down every day, just kind of, just no real direction other than sideways, like I said, that's my kryptonite. And you'll find that when this happens, I tend to go closer to cash. I do less trading because I just know that it just does not work out for me as a trader. So, okay. All right, let's take a look at the market. So as I look at this market, you know, there's a couple of things in this market that it just wants to make you pull your hair out. You know, you've got the lure of all the money being pumped into the market. So how can this market go down, right? Look, I get that. I do. I really get that. But then again, I look at the charts here and I see things like this. I see this candle here, here, and here, and we're just making this little top in here. Makes me very, very concerned. We are still above the Trendicator. Now, yesterday or Friday, we did close below the T-line, but the T-line is above the Trendicator. The Trendicator is still green. So we have all this, oh, which way are we going to go here? And, well, that creates chop. And like I said, that's my kryptonite for trading. So I try to stay away from that as much as possible. And that's what I'm going to do going forward until the market can actually show some strength to the upside. And for me, strength would be the upside is if we can get past about 393.20. Well, let's just drive it all the way to the top, I guess. If we can break out a 394 and show that we've tested this with some success, then I'll take that as there we go, a bullish sign. So we break out, we come in here and we test, great. Then that's a good sign that the bulls are back in the saddle. On the other hand, if we start pushing to the downside and we get below the Trendicator and the Trendicator turns red, like these red dots right here, if it turns red, then that's when I'll be focusing more on the short side, not so much on the long side here. So anyway, there's my thoughts on the overall market. That's my plan going forward, how I'm going to trade in it. So, well, let's get to looking at some charts that I'm going to add to the watch list. And, well, we'll talk about them a little. All right, here we go. Okay, the first one that I have on the watch list is Citigroup. Now, we also bought some Citigroup Friday relatively early, and this is one we've talked about quite a bit in the trading room, and I think I might even put it on a previous video. But we bought that, and we ended up closing half of C up here. Whoops, well, that'll work. We ended up closing half of C, and we're going to keep the other half, and we're going to be looking for it to move up higher. Oh, let's see what it can do around 67, see if it can get there. Maybe it stabilizes and then pushes up higher, but right now that's what we'll be doing. You know, with the Road to Wealth account, we do this constantly, is, you know, we'll buy something, we'll see the setup, we'll buy it, and then we'll take profits on the way up. And that's how we've been able to more than double the Road to Wealth account in 12 months. And it's by taking those profits, not by picking a top and, you know, being Tarzan up here. Oh, look at me, I picked a top. I would rather, hey, look at me, I took some profits. So C's looking pretty good here. So as I look at C here, one of the things that I use in the chart is the T-line. The T-line is probably one of the, as far as the overall chart goes, probably the number one thing over the years that I have come up with to use is the T-line as a guideline for bullishness or bearishness. Think of the T-line as a kind of like bumpers at a bowling alley. You know, they put the bumpers for the kids, or for grown-ups too, probably. But the bumpers in the gutters there. Think of it like that. It keeps you on the right side of the trade. So I use the T-line an awful lot. And you know, I look at a chart, and all my chart setups, they pretty much, in one way or another, they take in the T-line. And that's this black line right here. That's what we call the T-line, that black line. So if I'm in something and it starts to go against me below that T line, then I really have to question the trade. I really do. This is a typical below the T line right here, and this is a typical above the T line right there. All right, so a lot of the charts you're going to see tonight, that we have that up there, and you'll see my red line. Red line is not representation of a stop. The red line today is representation of, well, where I really wouldn't like the chart. I like the chart because it's up here. I would not like the chart if it comes back down. Okay, let's look at PFG. Oh, another thing that I noticed Friday, there were an awful lot of Morningstar type signals. I say type, I want to say that because I look at this chart and I see a Morningstar type signal. For all the candlesticks connoisseurs out there, trust me, I'm aware that this is not an official book perfect type Morningstar. Nevertheless, in my opinion, it means the same doggone thing. But I do understand it's not, what you would pick up in a book and see as a Morningstar signal. We have a day ending negative. We have another day ending negative and down lower. And then we have a bullish move up. And outside of the shape of the candles, this is doing the same thing as an official Morningstar signal is, in my personal opinion, okay? So when I look at charts like this, I see good reversal patterns here. So these are the kind of charts that I'm looking at right now because that's what's in the market. So as I look at this chart, I see what the overall chart is doing. Here's a nice little rally. Let's make this bigger. There we go. Nice little rally to the upside. And then you can see it just kind of pull back and make that J-hook continuation pattern. And then you can see right here where we have that little candlestick reversal pattern right there. So as I look at this chart, I'm thinking, all right, this is looking pretty good here. We're going to put a line right up here like this, kind of between that high and this high over here. We get a little over here. You can see we broke out. So I'm gonna be looking for a nice inside day anywhere in that buy box. I'll be looking for a buy signal in there. No guarantee we buy it. It has to meet all the criteria at the time. Of course, we've got to catch it at the right time. And the market also has to be doing the right thing, basically having our back. So we want the market to be in our favor. So if I'm going to be going long, I don't want the market to be tanking. If I'm going to go short, I don't want the market to be rallying, okay? So this is one trade we're going to be looking at here. ADS is another one that is shaping up pretty nice. I love this type of chart pattern right here. I really do. I really like that, where we rally and then we just start moving sideways, just like that. And then inside that sideways box, that rectangle, and that rectangle can be pretty wide sometimes. Then what I'm going to do is I'm going to watch this price action and try to pick out little signals in there that tells me who's winning the game, who's actually winning this game. And as I look at this chart here, I feel that the buyers are winning this game. So this is one I'm putting on that watch list. Let's clean that up. You can see this, again, that Morningstar type signal. Right there is Morningstar type signal. This was closer to book for perfect. This is not, I know. So I'm looking at that and I'm thinking, man, I like that. I like that sideways move there. I like the possibilities. I'm thinking that below 85.15-ish here, I'm not going to be interested in that chart. I'm only interested if it breaks out or holds above that area. So, little buy area right in here and even a little breakout, what I'm looking for. one of the little tools I have in my toolbox, if you could call this a tool, is I try really hard not to pick bottoms, not to come in here and say, well, I'm buying this here because I think it's going up. I would rather buy when buyers are buying it, and then I'm going to get in with them. I'm a swing trader. I hold anywhere from overnight to 10, 15, 20 days. I've got one position I'm in. I've been holding now. Well, if it doesn't shape up, it'll be going on a month here pretty quick. So I will hold them longer, but I'm all about profits and trading. So when I see it start to move up, I'm going to take profits. I'm not going to hold out for any any great, massive, well, $100. I'm not going to wait for that. I can tell you that right now. I'm going to be taking profits on the way up because I happen to know, and I know this for a fact actually, that if it does go to $100, the odds are about 100% that this thing is going to have some pullbacks along the way. And I'm the type of trader that wants to buy the pullbacks, sell into strength, buy the pullbacks, sell into strength, things like that. I'm not a buyer and hold to, say, to 100. Just not that kind of buyer, not that kind of trader. So we'll look at this. This is one reason we don't mind paying a little higher for it. And that's a reason why I want to wait till I see a bullish candle. This is why we don't chase candles like this. I will add to a position sometimes on a down candle. But as far as buying goes, I 99.9% of the time always looking for a bullish candle. So if I start to see the bulls pop into this, say like this right here, and they move up, maybe I buy it here, maybe I wait for that breakout like that, and I buy it. And then we manage the trade as long as it's moving up. Another trade that we're not in, this is one that we're looking to get in, and you can see this chart pattern here, kind of a sort of a doji continuation pattern. I wish the doji was a little bit higher, but that's okay. A little doji continuation pattern. Some folks might even look at this as a Fig Newton chart pattern. A Fig Newton chart pattern is when you have a bullish candle and then not so bullish candle, the fig part, I guess, and then the outside, there's the Newton part. So that gives us that Fig Newton cookie candle or chart pattern. Now, as you can see, that we're not quite low enough to make this one official, but it's still that. It's the idea behind it. Is it doing the same thing? And I would have to say yes, it is. Also, on this one, this trade here, you can clearly see we have resistance here. Here we've rallied, we've broken out of that resistance, and here we've pulled back and we've tested that resistance. And now it looks like the bulls are taking this back up. So I'm interested in getting into this. This is also a nice little J-hook continuation pattern. You can see that here, right there. That's what the J-hook continue pattern would look like. Of course, it has to break out, and that's what makes it the J-hook continuation pattern. So this is setting up for that. Another one we're looking at, well, actually we're not looking at this, maybe to add to it. We did buy this at the end of Friday, late in the day, very late in the day, if I remember right. We bought some Ford Friday, so I'd really like that to move up. Of course, below $11.40 maybe, I'm not going to like this too much. And here's that Morningstar signal right there. And if it started to trade below that 11.40 area, that would get us below the star down here, or below the close of the star. And that would, in my mind, that would negate that whole pattern. To me, I see a price action pattern like that. I'll give them a little bit of leeway sideways. I get it if they want to take a rest, but there's just no room no room at all to move down. That's not what this suggests to me. For me, it's more of let's get going here. So, like I say, I'll give it a little room in here for sure. That's where we would love to add to it in here. But outside of that, I want it to move up, not move down. Ford. So I think Ford is looking pretty good here. Facebook. All right, let's talk about Facebook. So Facebook is a short setup, and we did get into some Facebook short Friday, looking for that to move down. So what I did with Ford or Facebook is I bought a little, and actually what I would like to happen here is I'd like to see it bounce back up here, and then I would like to add to that position. I feel like I got in very late, should have got in earlier. So if it starts to bounce back up, then we'll look for an entry in there. To short that, of course, we're going to wait for that sell signal in there. We'll short that, and then we'll look at it, to move down a little bit. If this starts to move back over 269 and a quarter, actually, I'm probably going to move that up. Let's just call it 270. If this starts to move back over 270, that would be a sign to me that the buyers are pushing the sellers away, and we don't want that to happen. So I'll be watching that pretty close, both for an add to and is it going to get up here. And of course, if it starts heading down, we'll do what we always do. We take profit into our strength. CVS is another short. This is a pretty nice looking blue ice failure. This is the kind of chart we'll be talking about this coming Tuesday night, February 23rd at 8 p.m. Eastern in the Hit and Run Candlesticks and Right Way Options open room. Public's invited, so hope you can make it. But we'll be doing a blue ice refresher webinar. And that's what we've got set up here. Massive bearish engulf here, closing below the 50-day period moving average. And then we had a bullish Hiromi, actually one could call that a piercing candle, come up, well, maybe piercing, but bullish Hiromi anyway. We came up looking good, but then all of a sudden it just failed here. And actually what we've got is a bearish H pattern that has been made. And if it starts to follow through, then the H pattern will be confirmed. I did take a short on that, and I'll be looking for that to move a bit lower here, maybe in the 67 and some change area. If it starts to move up, I think what I'll do is move this up a little higher. I think I'm going to move it up to about 72.40. If we were to close above that 72.40, then I would have to reevaluate that chart for a short. That to me would be a sign that the buyers are getting a little too much strength in there, and I might not want to keep it. Home, H-O-M-E. This is looking like a pretty nice long trade. Little wicky. I got to admit, it's a little wicky for my taste. Big old shooting star here, followed by a whole lot of wicks. But I do see a low. Here, let's draw this out. There we go. I do see a low, a high, higher low, and then we started that breakout area up here, which really, let's see if we can change this to a 2-day chart, 3-day chart. What's a weekly chart? Look at the weekly chart. Here we have this shooting star up here, then all we did was move sideways, and now you can see the bulls are starting to come back in. So if we start to see a breakout of this $28.40 area, well, that could lead to some bigger numbers up here. I would have no problem myself buying on an inside day underneath that resistance, but I'll also be very quick on the trigger to close it if the sellers start taking control on this. And then, of course, 28.40 looks pretty good here. Let's look at that weekly again. See that weekly here? We come up and test this high in here. Okay, so, let me talk about this. So we're going to be doing a Falcon computer giveaway, and I will definitely give everyone a bunch of notice. Um, there's a few details we're still working out, but our plans are to do this. And I hope by this time next month we have given it away. It'll be a desktop computer from Falcon, and monitors and the whole shebang for you for the winter there. So we're pretty excited about it. I hope you're excited. I know I mentioned in the trading room, and a few people were real tickled about it. So we're looking forward to it. If it goes well, we'll do it again down the road again. So stay tuned. All right, stay tuned. We'll get information out. We'll send it out via email. More information on it, and then we'll mention it here in YouTube as we get more information on it. But it'll be a nice computer. That's what I use. I use a desktop Falcon computer. I have 6 monitors. I just ordered, 3 weeks ago, 4 weeks ago, a new laptop from Falcon. I have it on my desk now. I love it. And anyway, top-notch outfit, top-notch company for computers. The service is super. And anyway, we're really excited about giving one away. And so stay tuned. We'll keep you updated on that. All right? Okay, I've got a couple more charts to look at. URI, United Rentals. Check out the Morning Star in United Rentals right here. And if we got back below 277.65, I would not be interested in this at all. This reminded me, somebody asked me this the other day. Well, what if it opened up and maybe that same day or a couple days later, what if it went down below that line? Answer, I wouldn't like it. Wouldn't like it at all. What if it came back up? That was the second part of the question. What if it came back up? Then I would like it again. But I don't want to be part of charts that have this chart pattern that looks bullish, price action that looks bullish, a trend that looks bullish, everything that looks good to me. I don't want to buy it and then go the other direction. Now, I'll give it some room, yes, but I don't want it to get past a certain area. On this one here, I'm looking at 277.65. It could do this right here. It could pop right back up and then come down and hit that line, and I'm okay with that. But if this would have to be very quick. If this took 3 or 4 days, then we would end up putting the stop up into this area. But if it was, if we had a big candle and it came back down, as long as it held over that 277.60 area, I'm okay with that. If it wants to go below that, again, I'm not okay. If it comes back up, we're back in the game again. DFS is nice looking. Again, another Morningstar signal. We had tons of Morningstar signals painted this Friday. So now what we need is that follow through on these chart patterns. So we've got some DFS here. Nice little, actually, I just noticed this on DFS just now. If we were to take this right here, that would make a nice handle. And right here, that's called a scoop. So there's your handle and there's your scoop. So we start to see a breakout. This is a pretty nice bullish chart pattern. And on a breakout, man, this might be good to go. So we're going to keep our eye on that one. And again, I just now noticed that talking about the chart. So we've got a good Morningstar signal back below 91.30. I don't think I'm going to like that chart. MGM, another nice, clean setup. Most of the day Friday, I looked at this, not like most all day long, but on and off all day Friday, I looked at this thinking, I should buy some. Do you think I bought any? Nah, I didn't. And it closed up pretty doggone nice here. So I think what I would like to see now is just some consolidation. And it's okay. I'm not worried about this top. Just rest in here for me. And then maybe we see some buyers step in. And then we might take this. Below that 35 area, I don't think I'll like it so much. And below that 35, see that chart pattern? Again, I know this is not an official Morningstar signal. I'm aware of this for all the candlestick connoisseurs out there. I'm aware of this. But I also see that Morningstar type candle pattern in here. And underneath this $35 mark, that would negate that candle pattern. So I could not be interested in this below that 35. However, if it was to come back up above that area, I could be interested in it. Two more, and then we've got it done for the day. Here's GE. GE setting up. I really like the way GE is starting to look here. Look at that nice big cup, little handle here. We get this breakout, and man, GE's got some nice target points up here. There's not a lot of money to this 1330. Of course, it's good money. Don't get me wrong, but that's not a lot. Now we start getting up into the $15 range over here. Maybe the $17.50. That's some pretty good money right there. So I've got my eyes on GE. Yeah, I kind of like the GE chart. And the last one I have here is ALLY, A-L-L-Y, another Morningstar signal. Now that is a good Morningstar signal. So what we're looking for is positive trading. I really don't want that positive trading or, say, a breakout to happen till we buy it. I'd really like to get it in here. Then it can break out. And if it started moving down below this 41.70, well, I just don't think I would like it. So I would have to close it out. I know a lot of people that use the pivot low here, and that's perfectly fine if that works for you. Trading is pretty simple. It really, really is. If whatever you do is working for you, keep doing it. If it's not working for you, well, you might want to think about a different strategy. So my strategy is just basically looking for charts that are poised to move up before they move down and take advantage of that move up by selling into strength and putting that money into my pocket. Alrighty. I want to wish everyone a wonderful rest of your weekend if you see this before Monday. And thank you very much for watching our videos. Remember, there is a 30-day link below. Trial to hit and run candlestick if you're interested. And remember the Tuesday night, 8:30 p.m. Tuesday, because this video is going to be on YouTube for a long time, February 23rd. Is open to the public, and we are going to do a little refresher course on the blue ice failure. Alrighty? Hey, thank you very much for watching this video. We'll see everybody tomorrow in the trading room. Everyone take care. Have a great night.